Cyber insurance has been treated like property and casualty for years. Cyber is not seasonal like a tornado, flood, or hurricane. Additionally, when a company has a vulnerability, they patch it, and the risk is mitigated. Cyber insurance is at a crossroads. Prior to the COVID pandemic, the market was hardening, and its hardening has been exacerbated by an epidemic of ransomware. Policy prices have doubled, and coverage is now half of what we saw pre-pandemic. Using a questionnaire that trusts the questioner provides no verification of the cybersecurity controls that reduce the likelihood of a data breach or business interruption. The market is in crisis, and the insurers are now denying claims when the controls are not in place. In what may be one of the first court filings of its kind, Insurer Travelers is asking a district court for a ruling to rescind a policy because the insured allegedly misrepresented its use of multi-factor authentication, or MFA, a common condition to get cyber coverage. The ability to adequately underwrite terms and conditions, provide limits adequacy, and diversify cyber risk has to align to the dynamic nature of cybersecurity and the context of how a cyber criminal attacks the business. It requires the use of a digital approach. The cybercriminal attacks the digital asset. They steal data, interrupt business processes, and cause regulatory fines based on the type of data that is processed and stored in systems and technologies. Over 85% of the business is now digital, compared to 20 years ago when 10% of the business was digital. The increase in cybercrime is proportional to the increase in digitization. The digital asset approach allows you to calculate adequate limits, diversify technology risk, such as cloud, IoT, and AI, provide objective, meaningful metrics for actuarial analysis, and last but not least, allows the company to both trust and verify. Limits should be based on the data loss profile, sublimits on specific attacks like ransomware, business interruption from denial of service, and regulatory losses such as privacy, credit card, or healthcare data. If a reinsurance company has 80% of their portfolio stacked with AWS and not Azure or Google Cloud, they run the risk of paying out 80% in claims. Cybercriminals exploit vulnerabilities, which are weaknesses in systems and the technologies. Understanding the financial exposures related to systems and technologies is a critical requirement for reinsurers. Actuarial analysis to set the policy terms and conditions needs to verify the cybersecurity controls are in place to measure the likelihood of a cyber event. Controls mitigate risk. The current way of doing things is to trust without verification. Depending on who you believe, it was Reagan or Gorbachev that said, "Trust and verify." The lack of verification of the effectiveness of cyber controls has crippled the cyber insurance industry. Now is the time to correct that mistake with ValueRisk. ValueRisk is the only software that uses a digital asset approach to quantify cyber exposures and audit evidence of cyber controls. Based on 5 years of research with the Fortune 1000 and cyber insurance industry, ValueRisk is a highly automated platform that quantifies the insurance limits, provides for risk diversification, and allows actuaries to use relevant data to price terms and conditions. We work with captives, brokers, carriers, and reinsurance companies. Call us today for a demo and be part of the new revolution in cyber insurance.